we have seen that people do not abandon their gold when there's a price fall or a price fluctuation. That we have seen, and we see that our customers are paying their interest, etc. We persuade them to pay interest. So we have never had, in the last 10 years after listing also, we have never had a situation where we lost even 1 rupee because of the gold price fall. So we have never lost money on that. So customers have always been supporting us. The customers, we feel that auctions, as you were talking about auctions should only be a last resort. We generally try to persuade the customers to take back their gold. We give them more time to even take back the gold. We would give a guidance of 15% minimum growth. Of course, we have been able to overachieve that, but then that is what we overachieve. But as far as the company is concerned, we would like to give a conservative guidance of 15% on AUM next year and the coming years also.
All right, there you have the management of Muthoot Finance talking about the path ahead. But let's get our experts on board. We've got Kunal Bothra and we've also got Ashish Maheshwari, who's Director at Blue Ocean Strategic Advisors. Welcome to the both of you. Good morning to both of you. I want to talk a little bit more about these gold finance companies, and that in fact is the topic of today's focused discussion. I'll start with you, Kunal. Muthoot Finance, Manappuram, I think to a certain extent, largely driven by sentiment in the gold market as well. So perhaps a twofold question. If you can also, tell us where you think gold is going. I think that's a $1 million question. And also, what do you think about these two companies?
So, good morning, Alex. On the asset class of gold over the last 2 months, specifically in the month of March end and April start, I had mentioned that the asset class is heading towards a big breakout. It was at 44,000 odd levels on the rupee terms, and now it's at 49 plus levels. So the asset class has done pretty well. Muthoot Finance and Manappuram, both of them, they look pretty attractive. In fact, Muthoot Finance, I had given a call even yesterday on the morning show as well, that expecting that the stock will go through a big breakout. So the breakout has happened. Now, interestingly, there is a very typical similarity between both of these names. So what I've mapped up is the charts for Muthoot Finance and Manappuram over the last 12-13 months from the March 2020 lows. The blue line, as you can see, is the charts for Manappuram. And the green line apparently is Muthoot Finance. So if you try and look at it comparatively over the last 12-13 months, Manappuram had always an edge towards the rally on Muthoot Finance. But like what we've seen in the last 15-20 days for markets, that many of these underperformers in the markets are now moving up significantly higher, and they're outshining and outclassing the other peers from the pockets. So I think Muthoot Finance is also being a stock in that regards. The green line, as you can see, just in the last few days, have moved up way ahead of the blue line, which is of Manappuram Finance, and I think that's where the short-term advantage is getting back towards Muthoot Finance. But if the long-term trends come back again, then I believe Manappuram Finance could probably try and play a very good catch-up. So if there is a trade over here out of these, out of chart assessment, then I would believe Manappuram Finance could be a good buy from current levels, expecting that the stock could play a very interesting catch-up as compared to the history of the last 12-13 months.
All right, that was Kunal's view coming in on Manappuram and Muthoot. Good morning, Ashish. What are your views on these gold loan financiers, especially Muthoot and Manappuram? How are they looking? Do you think that gold prices, now that they're inching higher, it will be a beneficiary for both of these companies?
Yes, in fact, there are 3-4 positive things which have happened to all these gold finance companies. Let's discuss one by one. First of all, as you rightly pointed out, as gold prices are going up, they are able to maintain better margin and can lend more. Second, as the interest rates are almost at all-time low, so what is happening? Their net interest margins are just skyrocketing because their cost of borrowing is very low, and at the same time, they are able to lend it a decent rate of interest. So this is something which is in their favor. Third is because of lockdown, what has happened, because in rural India and semi-urban India, people like more because their day-to-day life is affected. So look at the numbers of Muthoot Finance per se. From 2,100 crore profit, what they did previous year, this year they did almost 3,168 crore profit. And out of that, 1,023 crore profit came in the last quarter itself. So you can visualize the kind of traction is there in the gold loan business. I like more Muthoot Finance in this space because, first of all, very low floating stock is there in Muthoot Finance. If you see 73% shares owned by promoter and around 25% is held by institutional investors. So hardly any floating stock is there. Along with this, they are very focused on gold loan compared to Manappuram, which has decent exposure to MFI segment also. So I like Muthoot Finance more. In my view, this stock has potential to even touch 2,000 rupees in next 6 months.
Okay, I want to come back to you, Ashish, on this next question. And you've mentioned between these two counters that you prefer Muthoot. And, I won't get into the whole aspect of how a couple of the large banks are also trying to make a dent into this gold loan space. But I want to understand in FY22, perhaps a little caution is warranted, right? Because you had Manappuram that came in with quite a bit of gold loan, with quite a bit of auctions in the last quarter, and that is indicative of a bit of stress. Perhaps to a certain extent because they have a lower tenor for the loans that they issue. And Muthoot, like the management was just saying, they treat a gold loan auction as a last resort. They choose to extend the tenor of the loans. Is there cause for worry in terms of delinquencies, particularly because the manufacturing sector and services sector in the rural segment has gotten more impacted in the second wave?
Because of the second wave issue, there are some delinquencies possible. But one good thing with these gold finance companies is everything is quite secured. And value, if you see in last 3 months, golds are appreciated from 42,000 to almost 50,000 rupees. So good amount of margin of safety is there. So I don't see any challenge per se as far as their book risk is concerned. In my view, they will continue to do well even in coming times if even lockdown is open, because again, people will require money to fund their business, and it's particularly small businesses. So I'm quite bullish as far as prospects of gold finance companies are concerned.
Ashish is pretty bullish on the prospects for the gold financiers, and among the two, he prefers Muthoot. He also sees that the stock could reach about 2,000 rupees level in the next 6 to 1 year. All right, but on that note, we'll slip into a break in this edition of Buy Now, Sell Now, but stay tuned, more on the other side, so don't go anywhere.
Powered by LG Air Conditioners. All in one, one in all.
Savings is just not possible on medicines.
It is possible. On NetMeds, you can get every medicine lesser than MRP. NetMeds app gives the best offers and savings up to 20% on MRP. Now for super savings, NetMeds, India's own pharmacy.
बदलाव आसान ना हो, पर बदलाव है जरूरी। तभी तो नए भारत के निर्माण की इच्छा होगी पूरी। देश की सुरक्षा, शिक्षा और विकास में जिस करदाता ने किया है भरपूर योगदान, तो उसकी कर भुगतान की प्रक्रिया क्यों ना हो और आसान। इसीलिए 7 जून 2021 से आ रहा है ई-फाइलिंग 2.0, इनकम टैक्स का नया यूजर फ्रेंडली पोर्टल और साथ ही मोबाइल एप्लीकेशन। इसमें है लॉगिन के लिए सुरक्षित और एकाधिक विकल्प, ऑनलाइन कर भुगतान के अनेक विकल्प, पहले से भरे हुए फॉर्म और ऑफलाइन उपयोगिता की सुविधा, हेल्प डेस्क, चैटबॉट के साथ साथ उपयोगकर्ता मैनुअल और स्टेप बाय स्टेप वीडियो गाइड का सपोर्ट। ई-फाइलिंग 2.0, अब सुरक्षा और सुविधा से आयकर भरना हुआ और आसान। प्रत्येक आयकरदाता एक राष्ट्र निर्माता।
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई, आग से बचाए।
Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's get going with the viewer queries. And our first query for today is from Tony Anthony. I think he wants a view on Infobeam. I think it is Infibeam, Beam, I believe. He's holding about 500 shares that he's bought at 1,200 rupees per share. He wants to know whether he should book profit or hold for the longer term with a trailing stop loss. Kunal, I'm unsure of which stock if he actually means, but if it's Infibeam and if he's purchased at 120 rupees per share, what should he do?
I doubt it will be Infibeam because I think the stock price is valued at 50 rupees as of now. I'm not sure the last, couple of years back what the price was exactly. But then if it's Infibeam, then I would suggest that, you can exit the stock. It's not a top quality stock as such. I think it's time now that market participants would get back into quality and such kind of themes, because now when you're into such a scenario where the markets have run up so exceedingly high, it's prudent enough decision to now get back and shift towards those safe or in large cap names. So you can look at Reliance Industries at current levels. You can look at even SBI as an alternative at current levels. So if you have a longer term time horizon, I would advise a definite shift, specifically if you have Infibeam as a stock.
Okay, just be careful, guys, when you're posting the name. I'm pretty sure there isn't a stock called Infobeans. We've got Halima who's asking about New India Assurance bought at levels of 165. Should you hold or book profit? What are the kind of results that are expected? I believe this is a question for you on the fundamentals, Ashish. How would you rate this counter?
See, as far as insurance sector is concerned, I am very bullish because this is a business which is quite sustainable and will continue to do well. Even if you see last year, a couple of quarters, net profit is 500 crore plus. So again, I'm expecting very good March quarter for New India Insurance. And in my view, insurance is a sector as an investment for long-term investor. If you want to make 20-25% kind of ROI over a period of time, surely you should stick to this particular sector. And as far as New India Assurance is concerned, you can remain invested. And the next 6 months, you will see almost 20% upside for sure in this stock from current level.
Next queries come from Mahesh Vaidyanathan. He's talking about PSP projects. He's asking how does the particular stock look over the longer term. He believes that the fundamentals are looking very strong. He's holding on to the counter since the level of 400 rupees per share. Ashish, what should do you have a view on PSP projects, and also what should Mahesh do with this particular counter? Should he continue to hold on to it?
Yeah, in my view, infra as a sector will continue to do well for next couple of years. At the same time, the valuation wise also, if you see, infrastructure companies are available at very reasonable valuation as far as execution is concerned. Again, PSP is a good company with available at just 1,500 crore market cap only, and looking at the size of order book what they are having, they can do really well over a period of time. And this is among the, if you see the top 10 strongest company in infrastructure sector, PSP is going to be there. So my suggestion will be to remain invested. You may see a price of 500 maybe in next 6 months in PSP. So my suggestion will be to hold this stock.
Tony, I owe you an apology. Infobeans Technology is the counter that you're looking for. It's a micro cap stock. Unfortunately, it's a little hard sometimes to get your view on that one. But we'll circle back and check if we can get you something on that. We've got a question coming in from Mihir Dhruv. And Mihir has purchased Tata Chemicals, Kunal, at levels of 780. He says he's bought 3,000 shares. He's not really given us a time frame that he wishes to hold it for, but what would you suggest that he should do with it?
No doubts about it that this is a class stock as such. The stock has gone through a consolidation. This is the 5th month, if I'm not wrong, from starting from the month of February, that the stock is going through a 100-pointer, 125-pointer consolidation. So I think it may take maybe probably another week or couple of weeks for the stock to complete this consolidation. But whenever that consolidation gets over, you could probably see the stock heading back towards that breakout. So if you're in from even from a 6 months or a 9 month plus kind of a time horizon, I think you can definitely hold on and look to average further. And if you're in from a longer term perspective, then I believe that these could be good opportune times where you can look to average further. Closer to 700 is where I believe that the stock has a good pivot support. So I would suggest that look to average closer to that 700 mark. That will help you reduce your cost price as well as stay in the game for much better gains over the medium to long term.
All right. The next query which I have is from Ritesh Garg. He's saying, I sold Titan June 1640 call yesterday because it started showing a red candle from resistance level. He wants to know, should I buy June 1700 call now after breakout confirmation, or have I missed the rally? Kunal, what's your take on this? Ritesh is asking about June 1700 call. Titan June 1700 call.
So, yeah, I think the breakout has just happened today for the stock. It was inching towards a breakout, but didn't successfully complete that breakout. Now I think at 1669, it's possible that the stock may go through a bit of a staggered up move. So yes, buying a 1700 call could actually turn out to be a decent strategy. But the only catch to the entire scenario for option traders now is that you always have to look at what happens to the benchmark indices. And currently for the Nifty, I don't know if many market participants have actually tracked the open interest or the put call ratio. The put call ratio on the Nifty is at 1.6, 1.62 levels. These are slightly overbought conditions for put call ratios, which typically indicates that maybe some sort of a profit booking could probably creep in over the next couple of days. So just keep that at the back of the mind. And I think if you can take advantage of those mild corrections which comes along the way, then I think it could be a prudent strategy to buy that 1700 call on Titan.
Commodities that has run up significantly is vegetable oil, and the government is actually contemplating at this point reducing the import duty on vegetable oil so that prices can be contained to a certain extent. Santi is wondering whether Marico should be bought or whether a reduction in import duty on vegetable oil by the government is something that could have a bearing. What is the rating? So rather he's holding Marico at levels of 402, and he's wondering whether to add further. I'm going to come to you, Ashish, on this one. How do you see this situation developing?
As far as edible oil prices are concerned, if you see globally, all commodities are going up. So be it crude or any metal or any edible commodity like sugar, coffee, all prices are at new high. So why edible oil will miss the that particular rally? So this is something positive as far as concerned, because ultimately the benefit can be passed on to consumer. But I think the Marico is more than just edible oil story, because and coconut oil at the same time in their food segment also, the kind of growth they have shown in the last quarter, the valuations have really went up by 20% once their last quarter numbers came. And in my view, they will continue to show 10% plus kind of growth in their FMCG portfolio. So this is a stock which should be added, in fact, in all declines, because this is another blue chip stock in making. My target for next 3 years, Marico, is 750 to 800 rupees. And all fall should be used as an opportunity to do SIP in Marico in mind.
Come back to you on this one, Ashish, because I believe that this is going to be a fundamental view or fundamental question. We've got Sangeeta who's asking about Snowman Logistics, and I think at the start of the entire vaccination drive, when there was this confirmation that you would need cold chain storage, Snowman Logistics initially ran up, but then you realize that the requirement for storage of these or transportation of these vials, some of them would be significantly lower, the temperature, than Snowman has the capability to provide. But the latest update Cause is that it will provide some help with regard to Sputnik V. We've got Sangeeta, who's bought at levels of 59. The stock is currently trading at 57.3, having run up significantly, nearly 12% in trade today. Should they hold on based on the fundamentals, or should you use this opportunity to exit?
Very volatile kind of stock, and in fact, a lot of retail players have stuck up in holding this particular stock at highs. So my suggestion will be use this opportunity because the prices are again going up to exit from the stock, because the more focus is going to be on pharma companies than logistics companies. So they are not going to make any big money out of transportation of a vaccine per se, because supply chain and everything is already set by pharma companies. So my suggestion will be to make a target, say 65 rupees for exiting from the stock, because if I see the quarterly numbers, there's not much improvement in last 3 quarters in Snowman's performance. So my suggestion will be use rally to exit from Snowman.
Back to you, Kunal, on this next one. We've got HDFC Life. Abhishek Bhandari is asking for a 3-month view and a target on this counter.
HDFC Life, and I think the entire insurance space looks very attractive to me. I would just request that if you can probably extend your time horizon from being very, very short-term oriented. These are very top quality companies which you're talking about, and they could be really strong wealth spinners over the long term. So I believe purely on charts as well as the leadership quality, the assessment which I had done statistically almost 6-7 months back as well on HDFC Life as compared to the other insurance stocks, statistically as well stands out to be that this could be one of the top performers from the insurance pack from a longer term perspective. So I would definitely suggest a hold on HDFC Life. And if you're specifically looking out for 6 months target, then I believe that the stock has capability of coming back towards that 725, 735 hurdle, which was the previous 3-4 month high for the stock, and from there where the stock has taken a bit of a skid. So I think from a 6-month perspective, 725, 735 could be a target range for HDFC Life. But as I said, the longer you hold, the better the potential could be returns.
All right, the next query is an email query that's come from Arvind from Chennai, and he's saying that he has 150 shares of Hind Copper that he's bought at an average price of 182.2 rupees per share. He would like to know what's the next 1-year prospect of the stock and what sort of a short-term target should he look at. Kunal, what's your view coming in on Hind Copper? What should exactly Arvind do? Stock is looking good over the next 1 year.
So it looks very attractive from the next 1 year perspective, and it's good that you have that kind of a time horizon, because what has happened is over the last 3 quarters, the stock has already done phenomenally well, from being a stock which was I think at 30-35 rupees to being a stock which is now almost at 165-180 rupees, which it tested just about a week or two back. So it's done pretty well for itself. And when you see typically these kind of rallies, short-term traders can probably expect that the stock may go through a bit of a retracement. But these are the kind of rallies which tend to restart a new trend for the stock on the long-term chart. So specifically from a longer-term view, I would advise a hold, but use corrections as and how it comes along the way for stocks like Hindustan Copper. So for example, if the stock comes back to say a 125, 130 zone, over the next couple of months, if it happens to come by to those kind of levels, you should look to average it out further.
We've got a question coming in from Twitter, and this is from Ram. Ram says that he wants a view, Ashish, on Sri Renuka Sugars for the long-term perspective. And this is also an account of a story that ET Now broke in May, if I'm not mistaken, with regard to the government's ethanol policy, the fact that it is ramping up ethanol blending to 20% very quickly. And he's also asking with regard to the recent drought in Brazil, which is the major producer for sugar, would you buy Sri Renuka Sugars for the long term?
To buy. Because first of all, let's evaluate Sri Renuka Sugar fundamentally. First of all, it's not owned by earlier promoters. Now it's Walmart company. So Wilmar is one of the biggest trader of sugar in the world. So if they are owning a company in India, which is positive. Second, their ethanol capacity is one of the biggest in country. So they are making almost 7,500 kiloliter of ethanol per day. Along with the sugar also, they are one of the biggest. So in my view, this is going to be a big turnaround story because all high cost that Wilmar has replaced, and they have provided funds from their Singapore company. But only thing is you require some patience because performance improvement and the positive numbers will what we are going to see in this quarter will continue to do well in next 1 year. So if you are having 1 year horizon, you may even double your money in Sri Lanka Sugar. So my suggestion will be to remain invested and even can accumulate more on decline Sri Lanka Sugar because this is a story which will now continue at least for next couple of years.
All right, the next query is from Zafar. He's saying that he has 6,500 shares of BPCL, which he's purchased at 440 rupees per share. He wants to know whether he should hold on to it or go ahead and book profits. Kunal, what's your take coming in on BPCL?
Extremely bullish on OMCs. I think I, for one, believe that these OMC stocks could go into a new range altogether from a medium-term to long-term perspective. So I think I've been bullish on BPCL and IOC specifically from the pack, and I think even from current levels, BPCL looks very attractive to me on the long-term chart. So if I think time horizon is not a constraint for you, then you should definitely hold on to BPCL. That's what I would advise.
Kunal, and coming back to you on Indiabulls Housing, we've got Sherry who's got a June 240 call and asking whether it can go up to 250 from the current market price of 231. Do you think that that's a possibility?
Is heading towards on technical fronts a weekly moving average crossover. Now the last time apparently this had happened for Indiabulls Housing on the downside, for example, was when the stock was at 1300 levels. So you can understand that how important this weekly moving average crossover is for Indiabulls Housing. And I think if that happens, we could be looking at a reset of the entire trend for the stock. So not just from a short-term view, but I think even from a medium-term to longer-term view, I think this could be a very attractive name. If this moving average crossover, which is just about on the verge of getting confirmed, maybe over the next 1 week odd, we could get more confirmation if the stock sustains about this 230 levels. And if that happens, this could be Indiabulls Housing. So I think purely on those prospects, you can hold on to your call options.
All right, the next query is from Jacob. He's saying he has 5,000 shares of Bandhan Bank, which he's bought at 331 rupees per share. He wants to know what's the prospect of this particular company over the shorter term, any reason that you can attribute to the downfall in the stock. What should he basically do with this particular counter? Ashish, I'll come to you with this question. How is Bandhan Bank looking like? Whoever has a holding in this particular company, does it make sense to stay put?
See, there are a couple of problems on Bandhan Bank. First of all, their small lending book is into deep problem. We have seen last quarterly management commentary where Assam and West Bengal, a lot of issues are there. But the only thing is all those things are almost priced in the stock because the stock has also fallen quite a bit. So my suggestion will be to wait at least for one more quarter and just see how much money they are able to recover from the MFI book. So my suggestion will be instead of this, better look at frontline stocks like SBI or even PNB kind of stocks compared to Bandhan Bank because they can give you better returns and uncertainty is not there as far as performance front is concerned.
Okay, BHEL is the next stock that we're looking at. Kunal, coming to you on this one, we've got Syed who's asking what levels you would buy BHEL at and what stop loss and target would you keep for the short term?
I think at current levels itself, BHEL could be an attractive buy. Frankly, Alex, I remember I think the stock in the month of March, April end and March beginning had done phenomenally well from being a stock which was at 40 odd rupees for quite some time, consolidating, languishing at those levels. It's jumped up quite well to 70, 72. Now, the best part about the chart is that even after the rally of almost 70, 80% from those kind of lows, it's remained stagnant. So you look at the last 2 weeks, the stock has been absolutely sideways. 70, 72 has been the pivot for BHEL, which means that the stock is trying to absorb all the, or go through a time-wise correction and then absorb, all the buyers who came across into, the last 1.5 or 2 months. This is a very good sign, which generally indicates that the stock is going through a mature phase of an uptrend. And I think if that happens, you could see the stock moving up to even levels of, 85 to 90 over the medium to long term. So I would definitely suggest a buy or a hold on BHEL at current levels.
All right, the next query is coming in from Shushrut. He is holding GAIL at from 150 rupees per share levels. He wants to hold this for the shorter term, but he wants to know what should he do. For now, should he go ahead and book profit, or should he continue to hold on to this stock? Kunal, what's your take coming in on GAIL? He's purchased it at 150 rupees per share.
It's a good investment. Short-term wise, you can continue to hold on. Maybe you can look out for 164, 165 as a target range. And if you're looking as an alternative to probably try and switch to a slightly high beta stock, then maybe you can book out profits over here and then shift on to ONGC. I think that stock is also looking quite strong. The crude oil effect as well is playing out to quite positive for ONGC, heading towards a breakout for month resistance at this 120, 122 hurdle. So this could be a good alternative. Depends on the kind of time horizon again. If you're in from a short-term view and looking out for specifically GAIL as a target range, and I would suggest 164, 165 as a target range over the near term.
Gentlemen, I'm going to request you to keep your answers a little shorter. We'll try and slip in as many as possible. I'm going to combine a couple of stocks, even though they're completely different entities and in different spaces, but they're from the same group, Tata Communications as well as Tata Steel. We've got Padma and Indu are holding these two counters. Ashish, would you suggest that they hold on to both of them, or would you suggest a switch from them?
I will advise to remain invested and in fact accumulate more of both these stocks. Again, reason is the data revolution is going to help Tata Communication, and next 1 year we are going to see excellent numbers from Tata Communication. As well as Tata Steel is concerned, the run-up what we have seen in the metal sector, in my view, one more year they are going to make tons of the money. So there won't be any negative thing in Tata Steel performance. So remain invested and ride the wave. I am expecting 30% at least upside in both the stock in next 1 year.
All right, the next queries come from Raghu. He's saying he's holding Infosys as a stock, as a portfolio stock. He wants to also add a mid-cap IT stock in his portfolio. So wants to know which one would be the right one and at what sort of level can he enter at. Kunal, what's your take on mid-cap IT? Which stock looks good to be added in the portfolio for Raghu?
Well, typical problem of plenty. There are so many stocks from the mid-cap IT space which looks extremely strong, attractive. It's very difficult to try and pick and choose or handpick just one or two names from the pack. But something from the mid-cap names which we've been recommending time and again. I think the likes of Mindtree, Coforge, they look fairly attractive. Even Tata Elxsi, I think, has been one of the stocks which looks extremely attractive, specifically from a longer-term view. Yes, the stock has done exceptionally well over the last 12 months, but these are the kind of trends which generally last for many years to come by. So if that's something to go by, then I believe Tata Elxsi could also be a good bet. But I would again advise more of a staggered approach. Have a buy on dips approach, specifically if you're looking to add on to these mid-cap ITs or large-cap IT names.
Okay. Ashish, coming to you on this next one, we've got a question. We've got a question coming from Santosh. What is the view on Coal India? We've got about 3,500 shares at 127. Is there any possibility of it going up?
So this is one of the laggard, if you ask me, in PSU front, which has not given any great return to investors over a period of time. But only thing is, as now momentum is again building up towards PSU sector, we have seen good run up in other PSU stocks. So my suggestion will be, instead of Coal India, you can look at other PSU stocks like BHEL or BEL, which can give you better return, because the kind of growth they are going to show will be much higher compared to Coal India. Coal India is a mostly dividend kind of story. So my suggestion will be to exit from Coal India and switch to BEL or BHEL.
Okay, we're going to have to cap this off right now. I'm going to ask one more question. And Kunal, I'm coming to you on this one. Rajan's got a question on Motherson Sumi. Would you look to enter this discounter at the current level? I believe you were talking about JK Tyre earlier today, and he's wondering whether to go into JK Tyre instead for the short term.
I think both of them are attractive. Depends on what how much risk appetite, etc., and time frame which you have. Motherson Sumi has given a big breakout on the long-term charts, almost a V-shaped breakout over the long-term charts, and we are talking of a high being taken off for 2017, 2018 for the stock. So, of course, it looks very attractive, specifically from a longer-term view. JK Tyre is specifically from a short to medium term. The stock is confirming a V-shaped, recovery, V-shaped rally, more on the slightly shorter-term chart. So I think over the last 6-8 months, it's given this kind of a breakout. So JK Tyre as well looks attractive to me on the medium-term charts, and I would expect at least a 145-ish kind of a target range in that stock.
All right, and with that we come to an end of the query segment. But before that, let's ask our experts about their high risk and low risk ideas. Kunal, starting with you, what's your high risk and low risk ideas for our viewers today?
So the first one which I'm suggesting is from the auto pack. It's about Eicher Motors. The stock looks attractive because it's found back its momentum, yet again on the short-term charts. So would suggest a buy with targets approximately at 3,000 levels, and stoppers could be kept at 26.25. And the second would be from the OMC pack, which we discussed just some time back. Seems to be now one of the strongest stock in terms of price performance from the OMC pack relatively. So, it's a IOC for a target of 135, stoppers at 105.
Ashish, on the high risk, low risk one?
Mid-cap ideas I like to share first is Endocount Industries. So this is a company into textile space and primarily into exports of bad linen. And they are the ones who are market leader in the particular segment where they operate, and most of the operations are in US. What triggers are there? First of all, they have done a capex of around 200 crore rupees recently, and out of the 600 crore kind of top line will be added in next 2 years in Endocount. So this is a company which is expected to do a CAGR growth in net profit of almost 25% for next couple of years. So how many textile companies you find at this valuation? So they're quite attractive at this price point, and I'm expecting 200 rupees in next 6 months in Endocount. Another high risk, high return idea I like in EPC and infra space, which is Westcon Engineering. This is a stock we don't talk much, but it has good potential going forward because they are having around 2,000 crore worth of order book, which is to be executed in a couple of years. So I'm expecting from a loss of 30 odd crores in this year, they may report 70 to 80 crore kind of profit in 2023 financial year. So a 10 rupee paid up stock available at 20 rupees is still, in my view, looking at turnaround, which is expected in Westcon Engineering. Just hold for 1 year and you may double your money even.
All right. On that note, thank you so much, gentlemen, for joining us, for taking your queries, and also for giving us your risk ideas for our viewers. We're slipping into a short break, but more on the other side, so do stay tuned.